Today, crypto prices make a comeback after Bitcoin briefly drops below $60,000. And Phil Harvey, CEO of Sabre56, breaks down the state of crypto mining amid a wave of acquisitions and AI investments. Welcome to CNBC's Crypto World. I'm Tanea McKeel. It's been a turbulent 24 hours for the crypto market, with Bitcoin dropping below $60,000 yesterday for the first time since May and then bouncing back above $61,000 today. The move coincided with a rebound in Nvidia and the Nasdaq, both of which suffered their worst day since April yesterday. Ether rose 4% today by noon Eastern. Solana, one of the top gainers, though, up more than 10% after the Solana Foundation announced Blinks, or blockchain links. Solana says the update lets users post on-chain actions as shareable links around the internet. On Wall Street, crypto miners are advancing as well. Hut 8 gained more than 17% by midday, thanks to a $150 million investment to build AI infrastructure. Core Scientific, meanwhile, was up more than 8% after revealing plans to expand its recently announced AI partnership with CoreWeave. Miners have, of course, become attractive targets for new investment and M&A, thanks to their energy contracts and large data center footprints. Sticking with all the recent crypto M&A activity for our main story, our Talia Kaplan spoke with Phil Harvey, the founder and CEO of Sabre56, a hosting provider and crypto mining consultant. He weighs in on mergers and acquisitions following April's Bitcoin halving and the recent surge in partnerships between miners and AI firms.
Last time we spoke was ahead of the Bitcoin halving event, where the amount of Bitcoins rewarded to miners was cut in half. That put financial pressure on operations. Now, the halving event took place back in April, but now that it has been a couple of months, what have you been noticing? When we spoke back in February, you said you expected to see consolidation among miners following the event, and that M&A is really the only way to grow given the restriction to the access to power. So generally speaking, what have you been noticing in the space since April 19th?
So the hash powers continue to climb, which is nothing new. And we have seen aggressive attempts of M&A in the space, as well as some smaller moves. Most recently will obviously be the Riot Bitfarms approach there to take over Bitfarms. But it's pretty much normal in the space at the moment. You know, nothing really has changed apart from access to power is harder and harder to come by. So that M&A approach has to ultimately be the way of growth.
Speaking of deals, earlier this month, Bitcoin miner Core Scientific announced plans to significantly expand its AI business. Specifically, the miner announced a 12-year deal with cloud provider CoreWeave to provide infrastructure for use cases like machine learning. Core Scientific said the agreement will add revenue of more than $3.5 billion over the course of the contract. What do you think about this deal and the fact that many Bitcoin mining companies have been retrofitting existing facilities to service AI clients as revenue from crypto mining plummets? Do you think we'll see more of this?
In the short term, yes, but it's a small space that we have for these AI HPC deals to be contained. Reason being, AI HPC needs a number of different facets that crypto doesn't, such as dual access to power, typically a number of different accesses to internet service providers, as well as water. So if you look at a large portfolio of sites, such as what Core Scientific has, only a few of those really permit to HPC AI. So across the industry, there's very few sites that lend way to this. Iris is another cryptocurrency miner that has access, to ultimate sources of power or multiple sources of power, as well as data. Look, it's a smart move by Core Scientific. They were on the down and out not too long ago after filing for Chapter 11. So it's a smart move for them to diversify their portfolio away from 100% cryptocurrency mining and hosting into AI HPC.
Sticking with AI, yesterday, energy infrastructure operator and Bitcoin miner Hut 8 announced a $150 million strategic investment from cloud computing firm Coatue as the demand for energy continues to bring AI firms to Bitcoin miners. The news release says that many traditional data center operators are failing to meet the surging demand for AI compute capacity due to power shortages, long lead times to bring new capacity online, and the extensive upgrades required for existing data centers to support the latest generation of high-density compute. Do you agree? And what do you think about Hut 8's move to develop and operate energy infrastructure to address what it calls unmet demand?
So if we look at the general landscape for cryptocurrency miners, your build-out cost is maybe $250,000 to $350,000. HPC AI is anywhere in the region between 3 and 5 million. So, it's a smart investment for the HPC operators to go and look at cryptocurrency miners that have access to power, that can, relatively speaking, convert cryptocurrency facilities into HPC compute. But it's not an easy process. It does take time. There's a lot that can't be used, in terms of physical size alone. The footprint that you need for HPC versus Bitcoin mining is around 4x the size. So again, that universe of sites that will permit use for HPC is quite small. But from a data center perspective, cryptocurrency miners do have access to power. It vastly reduces the lead time, especially when you consider it's 36 to 60 months lead time for an interconnect with a utility if you go down a traditional route versus an M&A approach or investment into a cryptocurrency miner that already has a substantial footprint and allocation of power.
Now, according to a new note from JP Morgan, the Bitcoin mining sector is attracting growing investor interest following the Core Scientific deal. The research says that the aggregate market cap of the 14 U.S. listed miners has increased 22% since the announcement, compared to a 7% decline in Bitcoin and a 3% increase in the S&P 500, which analysts believe highlights alternative use cases for mining facilities and the intrinsic value of power access and contracts. Do you agree? What do you think about that development?
Again, if you've got access to sites, assets that can be, with relative ease moved over to HPC AI, then money will flood into the markets. Cryptocurrency miners are looking for alternative revenue streams to move away from the volatility of cryptocurrency mining. It's a reduced competitive intensity within the AI space and HPC space. It's a fairly small universe. Not as small as the cryptocurrency space. So I think that money will continue to flow, especially for the likes of Iris, Hut 8, and Core Scientific, those that have sites that will lend their way to alternative uses. But not everyone, unfortunately, can facilitate the need, nor do they have access to the capital in order to change their business model.
And Iris was actually mentioned in that report. Now, Architect Partners pointed to crypto M&A's rapidly increasing pace, noting that over the last 2 years, there was $1.2 billion in total announced consideration, compared to a 2-week period in early June with $2.3 billion in total announced consideration, which included the revelation of an unsolicited offer Bitcoin miner Riot made to acquire its rival Bitfarms for about $950 million, which you mentioned. What do you make of all that activity that's happening?
As we spoke last time, it's going to happen. The access to power is getting more and more restricted. So the only option for these companies is for M&A. As you look further into the Riot Bitfarms deal, it's a sensible move by Riot, considering the fact that they need to diversify their portfolio outside of the US, specifically Texas, where they are mainly located. So, Bitfarms have a much larger geographical footprint, mostly across South America as well as into Canada. So it makes a lot of sense, certainly from a company growth perspective. We saw then that Marathon were on a very aggressive M&A streak towards the end of last year and into Q1 this year. it's going to continue to happen. There just physically is not enough power for these companies to grow into, and certainly not at the lucrative rates that they need to stay competitive. So M&A will continue to increase, and it will be a subject that will be a hot topic.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.